Good evening, everyone.
Good evening.
Thank you so much for joining us for this session on Input Service Distributor. Really heartwarming to see so many attendees attending this very hot topic of the day. Everybody is looking forward to understanding what exactly is this ISD. If we even understand how do we even implement for our own businesses. So we have our very own Hanish here. So with great difficulty, I've got this opportunity to, no, I would not say moderate, opportunity to ask certain questions with him, which otherwise is very difficult at office. He's hardly available with us because he's always busy at the department or with the client. So I take this privilege of definitely posing difficult questions before him. Uh, and I'm sure that he will certainly give us a lot of value add in terms of what exactly is ISD, how do we implement it, and what are the challenges one would face while implementing this particular new concept called as ISD. So, like to welcome Hanish to the session. Okay, so we'll
Thanks a
start
lot,
off with,
Sandesh.
yeah,
Am I audible?
you are, but it's a little feeble.
Okay, and is my video also fine? Because I am not able to see your video.
Uh, I am able to see you as well as me, but are you able to see the
Okay.
PPT?
No, I'm not able to see the PPT also. Mansa,
Manasa, are you able
can you
to?
just check?
Yes, sir. Both of you are visible. PPT is also visible.
Okay, perfect. No problem then.
But Hanish, you would have to see the PPT.
Wait, I'll just do one thing. I'll just download the PPT.
You would want to share otherwise, if that be the case, or
Wait, I'll just check what's wrong. Generally with GST, some or the other technical issue has to be there, no?
so my
Okay,
job for the
till
day for all of us is very simple. Uh, I'm just going to ask questions to Hanish, and I expect Hanish to do a lot of talking during the session. So the way we'll go ahead is I have certain questions which I've listed down with me in a sheet of paper. We'll go by one and then get Hanish's feedback on each of those. 45 minutes we'll spend on hearing Hanish, and then last 15 minutes we'll try to answer if there are any questions from the audiences present here. Yes, Hanish, you ready?
Yeah, I'm ready, but I think Sandesh is giving too much of credit to me, which I don't deserve. The entire session is based on the discussions which Sandesh and I have had. So all the complicated questions are from Sandesh only, and all the complicated questions answers also are from him only. So I'm just a medium. But yeah, there are few points or aspects which are really very interesting and which requires a lot of deliberation. We'll try to ensure that we cover as many complicated topics to ensure that we are all ready effective 1st April 2025 uh, to implement this new concept of ISD. Right, Sandesh?
Sure, I'll take over then.
Yeah.
So, Hanish, the first question for you is obviously we would like to understand what exactly is ISD, because right from the time GST law was enacted, we have seen there is a definition of ISD. We have seen there are sections to talk about what exactly is ISD. But when it came to implementation, not many people have implemented this concept of ISD. So since now it is becoming reality where all of us, wherever applicable, have to take this registration compulsorily. If you can throw us some light and make us understand what exactly is ISD, it would be very helpful for the audience present here.
Yeah. So basically, ISD refers to the full form of ISD is Input Service Distributor. So as the name has it, it is a mechanism through which you distribute the input tax on services, not on goods, not on capital goods, but only on services. So this is a mechanism which will enable you to transfer the credit from one location to another location, right? So how does it actually work? If I have a GSTIN where the PAN is same, okay, so that means we are talking about branch offices and head offices, then there will be a new registration which will come into picture, which is called a ISD registration, which will allow transfer of credit to the head office and to the branch office, subject to a lot of conditions which we will go through when we are going through the different portions of the slide today, or different portions of this session today. But the idea is that if there is a head office, or if there is any office which has acquired certain input services which will benefit not just that office, but it will also benefit the whole of the company. Take for example, say, classic case of statutory audit. Okay. Now the statutory audit is for the benefit of the company as a whole, though there is a possible argument that it is a head office function, but for the company as a whole, statutory audit is conducted. For all practical purposes, the auditor is going to raise an invoice on the head office. So now what we will have to do is, because a portion of the benefit of the statutory audit goes even to the branches, this invoice will have to be taken in the new registration called the ISD registration, and then distributed to the head office as well as to the branches in their turnover ratio. So if I have a head office which has 50% of the turnover and two branches which have 40% and 10% of the turnover, of the total group's turnover, of the total entity's turnover, and if I have an invoice with a GST carrying 1 lakh rupees as statutory audit, then 50,000 goes to head office, 40,000 goes to branch A, and 10,000 goes to branch B. That is what is the concept of ISD, where I distribute the credit to each of the branches in head office.
Fantastic. So while doing this distribution, if we have to understand what kind of credits are we looking at, or what kind of invoice are we looking at? Are we looking at only services? Are we looking at goods? Are we looking at goods and service? Is there something which is only permitted and something is prohibited, or everything is permitted?
So the provisions actually come up with a very new concept called common input services. Now, there is no definition to what do you mean by a common input service, right? But what I would believe is what they are trying to talk about is, if anything which is commonly used for the benefit of all the branches, which is built to a particular location but belongs to all the branches or more than one branches, that is the type of service which we are looking at. Now let's look at two situations, and initial stage we'll look at very simple examples to understand things better. Like, I have a head office in Mumbai. Okay. And Mumbai, for the purpose of their work, their specific work, okay, require services of a certain vendor. Okay. That being specific to Mumbai will not enter ISD chain at all, or ISD mechanism at all. But if Mumbai has acquired certain services which is useful not just for Mumbai but also for Bangalore, that is where ISD will come into picture. So we are talking about those services which are commonly used and not specifically used for a particular person. Now again, there is another point here. Even if there is a specific service, it might get covered under ISD, but that situation will come into picture only when, assuming that service relates to a Bangalore office, my branch office in Bangalore, but the invoice is received by the Mumbai entity. In that case also, because it does not pertain to Mumbai, that credit through ISD mechanism will have to be moved to Bangalore. So only in this situation, a particular service or a specific service of a specific branch enters ISD. Otherwise, we are only referring to common input services.
Fantastic. Great. Perfect. A related question here, since you said that there is a HO in Mumbai in your example, so which office are we talking about for taking this registration of ISD? Are we talking about the same GSTIN which we already have in Mumbai will also act like an ISD office, or do I have to have a separate office only for these ISD purposes?
Right. So here, section 20, okay, very clearly says the office of the supplier of goods or services, okay, will have to take a ISD registration. So my reading, like I was saying, there are a lot of disconnects and new concepts which are coming, but which do not have any definition, or which do not have any material available with us in form of circular or press release. But my reading is, when they use the word the office of the supplier of goods or services, that means they are talking about a office which will supply the goods, and that office itself is receiving invoice on behalf of other distinct person. That is the office which we are talking about will have a ISD registration. So I don't have to have a separate location which will qualify to be ISD. The place where I'm supplying the goods, as long as though that office is receiving invoice on behalf of a distinct person, that will qualify to be a ISD location.
Great. That is a big relief for all of us. If not, a common understanding is always that I have to again scout for an office make that as an ISD office and maybe incur additional cost because of this additional ISD registration. But this really helps. The clarification or the rather the clarity with which you said is great. So we can probably take the ISD registration for the same place where I already have a normal GST registration. Okay, so we'll probably go to the next set of questions that I have. So this is again a very, very common question which all of us have. So basically all this while we were doing something called as cross charge. You know, this cross charge is a very, very loose term which we have been using right from 2017 onwards to cross charge certain costs which one location incurs, which has benefit to the other location. So my simple question is this cross charge different from this ISD as a concept? Once ISD comes, will cross charge go away, or will this both of this prevail at the same time? So I'll have to do cross charge as well as ISD compliances.
Right. So this cross charge emanates from, and though we discussed that we will not refer to any section rules, we'll make it as simple as possible, but it is an occupational hazard. Schedule 1 says that if there is any transaction between distinct persons or between related parties, even if there is no consideration, that will be treated as a supply on which GST is required to be discharged. So the entire concept of cross charge arises out of this requirement because of Schedule 1. Okay. Having said that, now the point is whether ISD, which was also there, section 20 was very well there even earlier. So why are we saying it is mandatory from 1/4/2025 onwards? The reason is that recently a circular was issued which said that ISD is optional for the earlier period, and the GST Council in that meeting specifically said that from a future date we are going to make ISD mandatory, which means for the earlier period you might have transferred the credit by the ISD mechanism or you may not have. But effective 1/4/2025, you have to transfer the credit mandatorily from ISD perspective. Now, coming specifically to your question, whether cross charge is sufficient or whether going forward only ISD is sufficient or both of them will coexist together. Now, the answer to that question lies in understanding what is ISD and how is it different from cross charge. Point number one, cross charge is for related parties as well as for distinct persons. So that means it covers not just the branches, but it also covers the related parties, which could be my subsidiaries or which could be my holding company to whom I am doing some work with. Okay, but ISD is only for distinct persons. That is my head office and branches. That is point number one. Point number two, cross charge can be for goods as well as capital goods, but ISD is restricted only to input services. Third, ISD is only for common services, but cross charge can be for services which are common as well as specific. We'll come to that maybe a little later when we understand the mechanism relating to distribution of input credit. Okay. Fourth, in case of cross charge, I don't have to have one-to-one correlation between the invoice which I have got and the invoice which I am raising to my related party or distinct persons. Whereas in ISD, though in the returns I don't have to have one-to-one correlation, but for my record purposes as to how much credit I have transferred, there has to be one-to-one correlation between which are the invoices entering the ISD mechanism and which is the credit which I am distributing. Next, in case of valuation, in fact, there were recent circulars which said valuation, if the other person is able to claim the credit, don't even bother about valuation, even nil value will be accepted. But whereas when we come to ISD, whatever tax has been charged by my vendor, that is the tax I can transfer. So if you see here, fundamentally, there is a lot of difference between ISD versus what we talk about cross charge. It coexisting or not coexisting. Again, if we are talking about external services which we have received, external services received from a third party, which qualify to be common input services, all of this mandatorily from 1/4/2025 have to go through ISD route only. But internally generated services, example, Bangalore is doing work, a project for for their client who is situated again in Bangalore, but a portion of this assignment is being done by Mumbai office. Okay, say 30%. So now Mumbai will have to cross charge Bangalore for the work done by Mumbai for the billing which will be done by Bangalore. This can be done by way of cross charge only. But any services received by Mumbai, which will be enjoyed both by Mumbai and Bangalore, for which a third party vendor was identified, that will come through a ISD mechanism. So like I would like to repeat here, third party vendors, that is external vendors providing services which qualify to be a common input service, will go under ISD route, but internally generated services will go under cross charge. So that means effective 1/4/2025, both of these concepts are going to coexist. Again, there is a circular which says salary cost is not required to be distributed by way of a cross charge. So employee cost, if you want, you can transfer, but if you don't want, it is not mandatory to be transferred.
Fantastic. Great. Spoke about this. Okay, fantastic. So this set of questions are done. So we'll go to the next set of questions that I had. So we have been speaking about ISD becoming mandatory from April 1, 2025, and you also did throw some light on what was happening hitherto and what will happen probably going forward. But would you want to throw some more light on how ISD rated credits were getting transferred before 1/4/2025? That's question number one that I have. And when we spoke about internally generated services, in the same example from Mumbai to Bangalore, you said if it is third party vendor costs, it will go through ISD. However, if it is not third party vendor cost, but it is internally generated service, it will go through cross charge. My question to you here is, if for providing internally generated services from say Mumbai to Bangalore branch, if I have to acquire some third party vendor services, would that be internally generated services with cross charge, or would that be still going through ISD in the form of distribution?
Right. So if I have to use services in Bangalore, in Mumbai, for providing services to Bangalore, and which involves third party work as well. Okay, and all of it put together is being rendered to Bangalore as a service, then it will be cross charge only. Then I don't think we should go through the ISD mechanism.
Correct. Fantastic. So that means their valuation will play a role. It is not cost.
Yeah,
There's no one-to-one correlation. I can decide the
correct.
value. If the other branch is able to take full input tax credit, I might choose not to cross charge as well.
Correct.
Correct? Yeah, perfect.
Yeah, yeah.
Great. Yeah. So going forward now, you said April 1, 2025, it's going to become compulsory. So what do we have to do in terms of identifying the credits which are required to be cross-charged?
Okay, so what we should do is, I think, and maybe I think your question is more in terms of how do I identify the credits and how do I distribute, or how do I only
No, we'll come to the
identify what?
manner of distribution later, maybe
Okay,
preparedness a little later. But in terms
okay,
of, I would say if the vendor is invoicing to say Mumbai in your example, and if the
okay,
beneficiary is only Bangalore or both, or
okay.
as the case may be, is there something which we can do at this moment while implementing this, or will it continue the way it is continuing right now?
See, preparatory steps definitely can be taken, and I can already see there are questions on how do we transition from the current regime to the future regimes. Sachin has already raised that question. We'll discuss that aspect maybe a little later. But as of now, what are the preparatory steps which we can take as far as the invoice of Bombay is received in Bangalore, or Bombay is received in Bombay and Bombay and Bangalore is received in Bombay, or multiple other things. Okay, in that case, if there is a possibility to speak to the vendor and say, look, this is the service which is being rendered to Bangalore. So why don't you raise the invoice on Bangalore itself? So then I'm completely out of ISD, because in that case, the invoice of Bangalore is not being received by Bombay. The invoice of Bangalore is being received and consumed in Bangalore itself. Second, if it is Bangalore and Bombay put together, for which invoice is being received by Bombay, in that case, what you could do is you can ask the vendor if there is a scientific way of bifurcating the value which is related to or relevant to Bombay and to Bangalore. Then if you can speak to your vendor and say that, look, anyways, the invoice which you're raising is 1 lakh, and I know 70,000 worth is related to Bangalore and 30,000 is for Bombay. Then why don't you split the invoice and give two separate GSTINs and raise the invoice accordingly? Even then I move out of the ISD. And likewise, it applies even for cases where there are multiple branches. So if there is any possibility of splitting up the invoice at the source level itself, when I talk to the vendor, then it is no longer a common input service. It is a specific input service for that specific branch. In that case, going through the ISD route will not be relevant.
Great.
I hope that was what you're
Yes,
looking
yes,
at.
that was the question which I had in mind. Great. So we've understood what is ISD. Is there a difference between ISD and cross charge, and how do we implement ISD from April 1, and that both ISD and cross charge would prevail simultaneously even after 1/4/2025. Now the next question to you is, how do we distribute this ISD? We know ISD means distribution of input tax credit. If you can just throw some light on the distribution mechanism envisaged in the law, how do we identify credits, how do we distribute credits, and whom to distribute credits, how much to distribute credits, that will help us to understand this whole scheme of the ISD and the distribution mechanism there.
Okay. So I can see a lot of people who are posting questions. I would ask them if or I would request them if they can hold on to their questions, because we are taking one topic at a time. So a lot of your questions will get addressed, and maybe after that, at the end, you can post your questions, because there is 15 minutes time which we have allocated. Even if it goes beyond that, we will be trying to cover all the questions as much as we can as far as it relates to ISD. Okay, so coming to Sandesh question on how do we actually distribute the credit? Okay, so there what we are required to do is point number one, and I would want to repeat it as many times as I can. ISD is a separate registration, so you will have to apply for and obtain a separate registration, which means that you will have to assess which are the states which are receiving invoices on behalf of other branches, or common services are being availed in those states, and apply for a ISD registration. Okay. Second, identify all those services which you believe are common, which are for the collective good and not for a specific branch. Okay. Also identify those invoices which are specific to one branch, but the invoice are being received by another branch, because head office wants to control all the expenses. So head office has said, even though if it is consumed in Mumbai, please raise the invoice on Bangalore. The payment will happen only from Bangalore. Okay, so identify those invoices which are specific to a particular branch, which are specific to two branches or more branches, which are specific to all the branches, including head office. Okay, now once you have taken the ISD registration, once you have identified these invoices as to whether it relates to a particular branch or more than one branch or all the branches in office, if it relates to a specific branch, through the ISD mechanism, transfer the credit to that branch only. If it relates to two or more than two, but not all the branches, transfer the credit to those branches only. How? We'll come to that a little later. And if it relates to everyone, then transfer this credit to everyone. Now, how do you do this? The provisions are very, very clear. They say, go back to the last year. What was the total turnover of each of these branches? Okay, divide by the total turnover. Okay, in that proportion, you will have to transfer the credit. Like we were looking at the example earlier, if my total common input credit comes to 1 lakh rupees in a particular month, okay, and my last year, not the current month, not the current quarter, if my last year's turnover for state A is 50%, state B is 40%, and state C is 10%, then this 1 lakh will be distributed in 50,000, 40,000, and 10,000, which is in the proportion of their turnover. Okay. Now there is another situation which has been covered, okay, where they say, what if the branch has availed certain credit, obtained certain benefit, but that branch was not there in the last month, that means the last quarter, last year. In that case, they say, then go to the last quarter for the month in which you are distributing the credit, and use the turnover of that quarter to distribute the credit. Okay, so if there is any new branch, you go to last quarter. But if there is no new branch, then you go to last year's turnover. There are a lot of ifs, buts, a lot of other situations which will come into picture. Let's not get into too much of detail, but try to understand the concept as such. Yeah, Sandesh.
Perfect. Great. So if you can also throw some light on how will the credits of say CGST, SGST get transferred? If I have invoice from a vendor who's also located in the same state where ISD is there, obviously he would charge CGST, SGST. While transferring, how will that credit transfer happen? Will it happen as CGST, SGST, or will it take the coloration of IGST and vice versa? If you can just throw some light on that aspect also.
Yeah, this is a very crucial and a very important question. Thanks, Sandesh, for bringing this up. So what happens? So what Sandesh is trying to say is, assuming the head office has obtained a ISD registration in Bangalore, okay, and they have received some common services from a vendor who is also in Bangalore. So the vendor would have charged CGST, SGST. Okay, and the ISD also has a CGST, SGST credit of 1 lakh rupees. Now we are saying to state A, which is Bangalore only in our case, or Karnataka, the 50,000 rupees should get transferred. So what will happen is to Karnataka, 1 lakh rupees into 50% is 50,000, 25,000 will go as CGST and 25,000 will go as Karnataka GST. Okay, so totally Karnataka got 50,000 credit. Now the balance 50,000 has to go to state B and state C. The issue now will be the tax was paid as CGST and Karnataka GST. What will state B and state C do with the CGST with place of supply Karnataka and Karnataka GST credit, because their output is actually Tamil Nadu GST or Maharashtra GST with the place of supply of Tamil Nadu or Maharashtra. Now there is a specific provision here which clearly says that when ISD is transferring credit to the same state, okay, then whatever the vendor has charged, the same credit will get transferred. So if it is CGST, it will get transferred. CGST, SGST will get transferred as SGST, IGST will get transferred as IGST. But when the ISD is in a state and the credit has to be transferred to the GSTIN of another state, then whatever might be the credit, all of that credit will be transferred as IGST credit. So even the CGST, SGST will be transferred as IGST only to the other branch.
Fantastic. That means a credit of a particular state through ISD can be converted to a credit of another state while distributing.
Yes.
So a related
Correct. So I
question
remember
here,
one.
very interesting. Yeah. So
Yeah.
this question I need an answer from you. Say for example, in this I have a branch, I mean head office in Bangalore, and I've taken a registration of ISD also in Bangalore. And since the corporate office is in Bangalore, the rent of the corporate office, I'll ask my lessor to bill on my ISD. Going by the place of supply rules, the place of supply is Karnataka because the immovable property is situated in Karnataka. Are you trying to say a place of supply of Karnataka, because of immovable property being in Karnataka, through ISD mechanism, I can distribute the credits to another state?
I think so. That was a issue. That was an issue which all of us were thinking about. So at least you have given an example of rent of a corporate office, which anyways was eligible. I would like to go a little ahead and say if I am in Bangalore, okay, and I have a lot of events which are happening, customer events which are happening in Bombay, and because of which I incur a lot of hotel costs. Okay. Now, is it possible, meaning I'm just thinking in my mind, is it possible that I take a ISD registration in Mumbai, transfer all the Mumbai credits relating to hotel, which otherwise was ineligible because place of supply is not the place where I had regular registration, transfer that from Mumbai to Bangalore as IGST and will be able to utilize that credit? I don't see any restriction in the GST law as of now where ISD credit cannot be transferred because the place of supply is fixed to a particular location of the immobile property. So I believe in your case also the renting of immobile property for head office can be transferred to other branches. Likewise, a hotel credit situated where I don't have a regular registration, I can transfer it back to my head office. Though
Fantastic.
heart still says no, but I am there is no restriction. So as long as there is no restriction, we can do what the law says, that CGST, SGST can be transferred as IGST.
Great. That really helps. So next I have series of 4, 5 questions, which obviously I have ensured that are not on the slides so that it's a surprise question for you so that you could answer impromptu. So the first one is, since we are saying the vendors are invoicing on the ISD, who will be checking the eligibility of the credit now? Is it the ISD or the recipient branch or head office? Because there are n number of tests which one have to do, whether I've invoiced, whether I've received the good services, whether the vendor has paid the relevant taxes on the invoice, whether it's appearing in 2A/6A or 2B/6A as the case may be. Who would test all this? Because once the invoice comes to ISD, the way it goes to the respective branches is all in piecemeal. It is not the same invoice going to one particular branch if it's common. So if you can just throw us some light and tell us how do we meet this eligibility requirement test and in whose hands?
So meaning, if you look at different provisions relating to ISD, you will get a different answer of what is ISD, whether ISD is availing the credit or its job is only to distribute the credit. Right. So at one particular rule, it says that ISD is availing the credit. At one particular other point, they say, no, we cannot recover any money from ISD. Even if there is any wrong availment or transfer of credit, the recovery will happen at the recipient unit and not at ISD unit. And there is another place where they say the role of ISD is only input service distributor, nothing other than that. But I would think, especially when we are talking about 16.1 and 16.2, the conditions based on which we can claim the credit, whether it is appearing in 2A or maybe now in 2B, whether I've made the payment within 180 days, whether the service have actually been received or not. Okay, so that at the time when I'm availing the credit, as if I were claiming the credit in my regular registration, I will have to check that and see whether I'm satisfying those credits or not. There could be post facto conditions which I am required to satisfy. I am not required to consider that at this point of time, like payment within 180 days. As of now, we are not discussing that. But whatever are pre-availment conditions, like I should have an invoice, it should appearing in my GSTR 2B. Likewise, in ISD, there is something called as GSTR 6A. So as soon as the vendor files his returns with in his GSTR 1 with the ISD GST number, it will appear in GSTR 6A. So it has to appear in 6A only, then you will be able to claim the credit. So those pre-qualification conditions for availing the credit, which I check even today when I'm taking credit in my regular registration, that will have to be satisfied at ISD level. Okay, which is a specific section which is talking about it. It is collectively by reading all of it, I am trying to gauge, because like you rightly pointed out, Bangalore GSTIN in our example is taking only 50% credit. Bombay is taking 40% credit. Tamil Nadu is taking 10% credit. So who will satisfy and to what extent? Okay, so I would think in the spirit of the law, the ISD will have to check for those conditions, and only if they satisfy those conditions, they should be entitled to claim the credit.
Fantastic. A related question again now. So we spoke about eligibility. Now, who will check about blocking of the credits? Because we have sections under section 17, which blocks credit for various reasons. So now, assume I have an invoice from an insurance company where I've taken health insurance for my employees, which is one of the block credits under section 17.5. This particular credit, which is blocked, and ISD knows that it is block credit, would it distribute? If it distributes, then how does it distribute? I mean, does it still distribute in the same formula which you spoke about in the previous slides, or is there a different mechanism of distribution of such ineligible credits in the hands of ISD?
See, again, the GST provisions as far as they relate to ISD gives us mixed signals here, okay? So what they are trying to say is whatever is the common input service for which you have received invoices in ISD, you have to mandatorily transfer all of it to the branches. So whether it is eligible or ineligible, you have to transfer. When we look at this, then we will understand that our assumption will be that ISD is only distributing credit. It cannot avail credit or sit on judgment of whether it is eligible or not. But now there is another point there where it says that if there are any credits which are eligible and credits which are ineligible under section 17.5 or otherwise also, okay, then you distribute the credit by mentioning, when you are transferring the credit itself, specifically mention that whether it is eligible or ineligible. In fact, if you go to the ISD returns also, what you have to do is, though you don't have to give invoice level reference, maybe the procedure would be, assuming there are 10 invoices, okay, of in under ISD for that particular month, you will have to against each of those invoice mark as eligible, ineligible. Assuming the last invoice was for medical insurance, you will mark that as ineligible, other 9 are eligible. You will do a total, transfer all the credit, but while filing the returns and while raising the invoice also, you will say proportionate to 9 invoices eligible, proportionate to 1 invoice, which was that last invoice which was blocked under 17.5, you will mark it as ineligible. You will transfer everything, okay, but to the extent of that, I'm sorry, one second, there's some error here. Okay, to the extent of eligible, you will show separately. To the extent of ineligible, you will have to show it separately.
So that means whatever invoices are appearing in GSTR 6A of ISD, the ISD will distribute all of it. Some
Correct.
calling it as eligible, some calling it as ineligible, depending on the criteria spelled out under 17.5 or otherwise.
Correct.
Okay, a relevant question again here. Since you're talking about eligibility, we have section called as 16.4, which is the time limit to claim the input tax credit. Now, once the distribution by the ISD happens to the respective branches, does 16.4 apply to the respective distinct persons or the branches for claiming the credit on the ISD invoice?
So if you look at 16.4 very, very carefully, it talks about time limit for availing credit relating to a invoice. And invoice has been defined to mean a invoice under section 31. But section 31 only talks about tax invoice. Only rules are talking about a ISD invoice. So I would believe that 16.4 will not apply to a ISD invoice. It will apply only to a tax invoice raised by a vendor. So if a ISD has raised invoice on its branch, the branch can avail that credit whenever it wants to avail without any restriction under section 16.4. I'm sure there will be a amendment to this provision, but as of now, this is what the law is, because they use the word only invoice and not ISD invoice. And mind you, both of these are different.
Yeah, so maybe this can be supported through Rule 36, which Rule 36 talks about
Yeah,
document on which I can claim input tax. The first of the documents talks about a tax invoice by supplier, whereas
correct,
the ISD invoice is having a separate line entry there, which itself
correct.
means that the tax invoice
True,
and the ISD invoice are two different set of documents. And 16.4
correct,
talks about an invoice, so thereby by a supplier. So thereby we can always argue saying that what is promulgated in 16.4 is not ISD, but a invoice by supplier. And ISD is not a
correct,
supplier for that purpose. Fantastic.
correct.
Yeah. So, okay, let's the next set of the next question that I have is again a very tricky one. So, how do we tackle this RCM invoices that we get, say legally fees invoice from a lawyer? Would it be routed through ISD, or can an ISD pay tax under RCM and then distribute? Or is there any other mechanism which we might have to follow to overcome this RCM issue which could come up going forward?
So again, there are tidbits and bits here and there which we will have to read together to understand this. What will happen is, if you look at the returns mechanism today, ISD does not have a provision where they can make the payment. So what will happen now is that there is a specific rule which clearly says that head office, or for that matter any GSTIN, can raise an invoice on the ISD. So that means, by reading it backward, it means is the head office, assuming in our case, is obtaining legal services for writing contracts or something related, which is related to the entire group, okay, or HR policies, okay, they will receive this invoice in their name, not in ISD, though it is a common service. Okay, they will receive in their name. They will pay GST on that under reverse charge mechanism. And whenever they pay GST under reverse charge mechanism, they are required to raise an invoice. They will raise the invoice by giving reference to the GSTIN of the ISD, and then the ISD will be able to claim the credit and then transfer that credit. Okay, but now the procedural aspects become a little more complicated here, because there will be a lag of 1 month. So how it will work is, say assuming in the month of April I received the invoice of a lawyer, I discharge the tax in the month of April itself, and I claim the credit in April itself in my HO return. Okay, now I will have to generate a GSTR1 invoice. Sorry, I have to raise an output invoice, report it in my GSTR1, pay the tax so that it will appear in the GSTR 6A of the ISD, and then ISD in the next month will be able to claim the credit and distribute it to its branches, to the other branches and head office again. So in case of RCM transactions, this long route will have to be followed, where tax paid and then invoice raised and then credit distributed.
Fantastic. So this comes to the next question where assume I have a SEC registration as well as a non-SEC registration in the same state. Question number one, do I have to take a ISD registration compulsorily? If I take, and to the extent of what pertains to SEZ and what needs to be distributed from ISD to SEZ, can I claim the benefit of Section 16 of the IGST Act, that is zero rating supply, because it is used for authorized operation? Third, if you say no to the second one, what will happen to the taxes that gets discharged or rather distributed to SEZ? Can it claim the input tax credit? If yes, can it claim the refund of the input tax credit? So there are three questions which I asked, all related to
Right.
SEC.
SEZ, yeah. So, just a background of what Sandesh is trying to ask here is that if the services are directly availed by SEZ, then the vendor does not charge the tax because it is zero rated, and so there is no accumulation of credits in the hands of the SEZ. But now, if there is any common credit, okay, we will have to route it through ISD. So now the vendor will raise an invoice on ISD by charging GST because now he is not supplying goods to, supplying services to a SEZ, right? So he will charge, and then based on the turnover of SEZ and non-SEZ, this will get distributed to both the units, which is one is SEZ, one is non-SEZ. So assuming SEZ has 30% of the turnover and non-SEZ has 70% of the turnover. So 30% of the input credit of that 1 lakh GST goes to SEZ, which is 30,000 rupees, and 70,000 goes to non-SEZ. Now, what happens is SEZ does not have an output tax because all their majority of their supplies are either exports or supplies to another SEZ. Okay, so this credit keeps on getting accumulated. So that's where the question is that what happens to this credit? Point number one, if it is in the ISD route, the vendor will not be able to take a zero rating benefit. That means the credit will have to be transferred to the SEZ. That is point number one. Point number two, it will always get accumulated in the hands of the SEZ because it does not have an output tax liability. Okay, that is point number two. Then point number three, what does the SEZ do with this? The only option available with them is to claim refund, but we have had practical challenges where the SEZ where the authorities have said that SEZ can never have accumulation of input tax credit because nobody is required to charge tax, and even if somebody charges tax, the refund can be claimed only by the supplier and not by the recipient, though there are other judgments otherwise also that SEZ, if they have credit, they can claim refund of that. But at the ground level, at with few GST offices, we have faced issues where the refund was not granted. Okay, just while thinking this, Sandesh, I got another issue. I am just thinking of another issue. See, when a vendor raises invoice on the SEZ, it will always be IGST, even though the vendor and the SEZ are in the same state. But here, the way the distribution mechanism works is that if the ISD and the SEZ registration is in the same state, then CGST, SGST will go as CGST, SGST only. So now whenever I'm distributing the credit to SEZ, I will be forced to distribute as C and S only and not as I. Will it have an impact on the returns which are being filed for SEZ? That I will have to check whether credit can be claimed by SEZ under C and S, or C and S is blocked, like their output is completely blocked. You cannot report anything in SEZ as C and S, it will always be I. So whether input also is blocked or not, I will have to check once. In 1718 it was possible because some of the credits were appearing as C and S, but now whether it is blocked or not, we'll have to check that once.
That's a good point. In fact, yes, we need to go back and see maybe procedurally is that permitted.
GST portal law, we'll have to see.
Yeah, as you said, because the manner of distribution of credits by an ISD, they only envisage a situation where the branch is in the state or outside the state. They're not spoken from the angle of SEZ being a branch within the state. Maybe that's an open issue which needs redressal. So yeah, so the next question I have is, can I accumulate credit in ISD and maybe decide to distribute the credit once in a year? Because there are a lot of hazels here, because what you're saying is a lot of work. And this much of work, we're already struggling with the existing work, and this is only adding to the existing work. So obviously, it's going to be more problem for us. Is there a possibility that say once in 3 months or once in 6 months, which is half yearly or annually, I can accumulate all credits in my 6A and distribute once for all if there is no problem of utilization of credit in the other person's hand or the other registration's hand? Is that a possibility, or do I have to do monthly?
Yeah, so the rules very specifically says that the credit has to be distributed on a monthly basis only. So from a rule perspective, that is what it is. Now look at the portal law. Okay, let's understand the portal law. The portal is not linking the GSTR 6A with the credit distribution. So that means portal allows you to transfer the credit whenever you want to. Okay, but portal law may not be the correct law. We will have to go with the GST law only. So as of now, the law is very clear. It says you have to transfer the credit. But okay, what happens if I don't transfer? Okay, you're asking me to transfer. Okay, but what happens? Effectively, whatever credit I was required to transfer to a particular branch, I am transferring that amount itself. So I think liberal or a reasonable view has to be taken that the credit can be transferred as and when you want to transfer, because the credit is linked to the last year's turnover. So entire year this year it will be based on last year's turnover only, unlike rule 42 where every month the turnover changes. So I will not benefit by distributing the credit once in a year or once in a month. There is no change in the total credit transfer. So I think a reasonable view will have to be taken because there is no impact really as far as the revenue is concerned.
Too many issues, I think, with what you have been saying. I'm just thinking in my mind as to how do we even implement this for so many of our clients, likewise for the professionals who are here for their clients, as well as the business people here for their businesses. So now tell us some alternatives. No, I mean, we need to understand. We understood what the law is. We went by the book. We understood this is what is required to be done. But obviously, we are here not to hear what is there in the book. We want to hear from you what are the alternatives that one can apply to overcome all the troubles that you said for the last 40 minutes? Is there something which we can think about and come up with so that we can reduce our work or burden?
Right. So, before answering that, so whenever we would ask, or our family would ask, when will you be free? We would say that GSTR 1 is on 11th and GSTR 3B is on 20th. So I will be busy before that, and after that, free period is 12th, 13th, or maybe to a certain extent 14th also. Okay, I think somewhere government has heard that also, and they said, why
Mhm.
should you be free on 12th, 13th, and even on 14th? So let's introduce this ISD registration, ISD returns, which will have to be filed during that period. So now we are not free at all during that period as well. Okay, so I'm sure all of us are trying to see if there are any shortcuts or are there any alternate routes to say, no, no, ISD is not mandatory, I will do something else. Okay, so three to four mechanisms I can think of, but please take these on your own risk or based on a proper legal opinion, whether it is workable or not. Point number one, if you look at section 20 very, very carefully, okay, very, very carefully, it says ISD refers to the office of supplier of goods or services who receives the services on behalf of a distinct person. What if I am not receiving anything on behalf of a distinct person? I am receiving it for myself only. There could be eventually beneficiaries. The distinct person could be a beneficiary, but I am not receiving on behalf of the distinct person. I am receiving on my own. Classic case against statutory audit. That's where I said statutory audit is debatable. It is a HO's function to decide who will be the statutory auditor and how he will report the transactions to me. Okay, subject to the institute guidelines and other things. Okay, so now it is a HO function. I have not received 10% of that invoice on behalf of a distinct person. So effectively that means that the ISD will only come into picture when the HO receives the invoice which is specifically related to a branch and which is not related to the HO's function. Marketing expenses. It is HO's responsibility to decide whether they will give ads in a newspaper or it will give ads in a television commercial or in IPL. So though the eventual benefit of sale will happen even to the distinct person, but it is not that the invoice has been received on behalf of a distinct person. Contractually, I was required to receive the invoice, I have received the invoice. So from that perspective, a lot of work as far as ISD goes away. The credit will still be taken by HO only, and if HO wants to, by way of cross charge, transfer the credit to the distinct person like they have been doing currently. Okay. Point number two, invoice can be raised by regular registration. Okay, this is very important to ISD. That provision also has been given. Now this I understood that it could be only because they wanted to enable RCM credit to be transferred. So in case of RCM transaction like we discussed, the invoice will be raised by the vendor on the head office, assuming head office will pay the tax, discharge the tax, and raise an invoice on the ISD, and ISD will claim that credit and transfer it. Okay, but nowhere in that provision they say that this is restricted only to ISD. In fact, the invoicing requirement says when you are transferring the credit to ISD by raising invoice from regular registration to ISD, okay, please give reference to the invoice of the vendor also. So I would believe it is a third party vendor also, which means whatever we spoke, Nothing to be done. Vendor will raise the invoice on the regular registration itself. I will internally decide which one is common, which one is not common. Whatever is common, I will raise the invoice on ISD. So I will not engage with my vendors at all and say, please raise invoice on my ISD registration. They will continue raising on my regular registration. I will internally decide what is common, raise the invoice on the ISD. ISD will then distribute the credit to my distinct person. That is second. Third, Third option. Now, what is ISD trying to do? ISD is trying to ensure that if there is a benefit of an input service which was available to a particular branch, the credit also should go to that particular branch only. And if I am able to do that by way of a cross charge, then how does it make a difference whether I am transferring it by way of ISD or by way of cross charge? If the other entity is not able to claim the credit, then there is a possibility that the taxpayer will play around with cross charge and transfer the credit lower to the extent it relates to the entity which is providing exempt services or exempt goods, because then his reversal under Rule 42 will be less. Okay. But if the entity is able to claim the credit, okay, then whether I transfer the credit which was I was supposed to by way of ISD, I am able to do it by cross charge. Then why should I even implement ISD? Is something which, from a logic perspective, we could defend. Okay. Or fourth, like I mentioned to the question which Sandesh had posed earlier, at the source level itself, ask the vendor if they can split the invoices, and you get split invoices by way of a scientific mechanism, not just randomly ask for a split, by way of scientific mechanism as to how have you arrived at of that 1 lakh GST, 10,000 should go to X branch, 20,000 to Y, and 70,000 to Z. And in your work order or purchase order itself, incorporate this condition and ask the vendors to raise the invoice. Then there is no ISD requirement at all for those invoices where you are able to get a split invoice. So these are the four, I think, alternates to ISD. But again, some of it is really very aggressive. Some of it could lead to litigation. So you'll have to be mindful about the litigation cost also before you implement one of the four alternatives.
Great. So we heard you. We understood a lot of things about what ISD is. How do we distribute the ISD? What are the intricacies which are there when we are talking about a transaction with an ISD? And the alternatives which we can think about, obviously, with our own risk appetite that we have, along with the legal opinion to back that. So what are the next steps now? How do I prepare myself before 1st April arrives? So what are the to-dos or must-do things before we do? If you can just throw us some light on those, that'll help us.
So, yeah, so there, one thing, meaning to start off with, I would say that starting today itself, assess which are the locations where you are availing common services. Now, when I say which are the locations, that means that you can have multiple ISDs. That is, you can have a ISD, of course, in head office, but also in branches which are obtaining invoices where common services invoice have been availed, which are for the collective good of all the entire organization or for few branches other than the branch which is getting invoice. Take the GST ISD registration today itself. Don't wait for 1st April 2025 because you know how easy or difficult it is to get the registration. Okay. Third, identify all the common services. If you have a ERP or a SAP or a Oracle, then whatever is getting booked under HO, corporate, admin, HR are all generally treated as common. Okay. Now start discussing with your vendors who are under that common list, that from now on, if you are providing services which are of nature A, B, C, then please raise an invoice on ISD registration. If it is specific to Bangalore, so whenever I issue a work order or purchase order, I will let you know about that. If it is common, please give it in ISD. If it is specific, then give it in the Bangalore GSTIN or the specific GSTIN only. Okay. Also, maybe you will have to check in your accounting system if there is any change required to ensure that you account for those invoices separately which are coming under ISD, because today you will do a GSTR2B reconciliation with your purchase register. All these will not come in your GSTR2B, it will come in 6A. So maybe accounting system changes also will be required to be done. Next, also on a monthly basis, monitor at least for the next 3 to 6 months that whichever vendor you have identified and who was supposed to raise invoice under the ISD registration, is he raising in ISD, or because his accountant has missed this mail which you have sent, he continues to raise the invoice in regular GST and ask him to amend those invoices. Okay. Then, based on that, after all this is done, distribute the credit and ensure that you don't lose out the credit, which means claim that credit in the regular registration. Now, these are the preparatory steps you will have to start taking from today itself.
Amazing. Fantastic. So I had promised you to give you 45 minutes. I think I gave you 50 minutes. So I
Right.
have to definitely give some time to answer the questions which are there in our chat box. So thank you so much, Anish, for sharing your
Thank
valuable
you.
insights on the topic. So let's go to the chat box and see. There are a lot of questions there. So let's pick and choose what is relevant for the discussion and then maybe try and answer those. Hmm.
Sandesh, so in the meantime, can I request you to display our thank you slide where we have that QR code so that people who want to connect with us can join our community and we can update them on GST as well as all our upcoming webinars.
Perfect. It's there on the slide.
Perfect, perfect, done. So if you are okay, because I've done a lot of talking and you have asked me a lot of difficult questions, now let me take this opportunity to ask you questions and get your views, even if they are different
Certainly.
from what maybe I am discussing, so that
Sure.
I get to hear from you as well. Now, this is an
Perfect.
opportunity, guys, for Sandesh and me to interact with each other when we are doing webinar. Otherwise, we are running around here and there, so we don't get time to interact. So now I get the opportunity to ask all the difficult questions, including even if you have not posted, if I have any complicated questions, I'll bounce it off to Sandesh. Right?
Please shoot.
I'll avoid all the questions which are already covered. Okay, so because of paucity of time, right? Um, Krishna asked a question. Section 20 is not overriding Section 7, the supply. As we understand, cross charge is a far larger umbrella than ISD. What precludes head office from raising invoice for supply instead of ISD? In other words, is ISD um, still practically mandatory, or can we still cross charge all the input services received by HO?
Yeah.
So,
So
Sandesh, the question here is whether I can still go with cross charge even if ISD is supposedly mandatory from 1st of April.
there are two aspects to this. One is if there are common input services, going by the definition as well as section 20, ISD registration becomes mandatory. Once ISD registration becomes mandatory, such common credits have to be transferred from there. As you rightly said, one can explore the option of getting into section 7 and raising an invoice through schedule 1 and call it a supply. But just bear in mind the credits that you are presupposedly claiming has to still pass the muster of section 16.1. That means the registered person who's claiming the credit should be using that credit in furthering his business. So if the credit are not pertaining to him alone, or if the credit is pertaining to some other branch, he claiming the credit itself could be a risk that he would be carrying. Forget the output side of it. First is the credit part of it, because only if you are able to claim the credit is when you can think about cross charging it back to the other states. So think about 16.1. Would you pass the muster of furthering the business in your hands? When we talk about the credit in a question, is something we'll have to answer for yourself. Second, for cross charging, you have to still establish is there a supply in your hands or not. Just because a vendor has invoiced me, I cannot invoice it back to somebody else back to back. I still have to prove that there is some service which I am providing to the branch. Only if there is a service from me to the branch is when I can include the cost involved in provision of such service to cross charge. If the answers to 1 and 2 is yes, is when you can go through the route of cross charge. If one of the answers is no, I would not want to go through the route of cross charge, but continue through the route of ISD. I hope I have
Got it.
answered your question.
Perfect, perfect. Now, a very interesting question by Monish. Okay, can I obtain ISD registration at a place of business? Okay, in SEZ, since my HO is in SEZ.
So point is that the ISD registration is not linked to SEZ or non-SEZ. It's a different species on its own. So if you have a HO in SEZ, you can still have an ISD which is neither SEZ or non-SEZ. It's only a category of registration. So thereby, once you have an ISD registration now, the invoices whenever a vendor is raising will always be raised with tax. You cannot say because of my because my HO is in SEZ, the invoices that get raised to ISD are also for authorized operations of SEZ. That argument may not work when you talk about an ISD. So thereby, the ISD is a separate species. Any invoice raised on ISD will carry tax from the vendor side. So thereby, when ISD in turn distributes the credit, if the distribution is to SEZ or otherwise, the taxes would get distributed to that particular location.
Right. So Vijaya had raised a question earlier. We have covered a portion of it, but still I found this question interesting, so I'll raise this. I have two registration. The main office is in Karnataka and branch office in Tamil Nadu. All the activist billing happens from main office. All the employees are working from main office or from work from home. All the vendors also raise invoice on main office. The Tamil Nadu office is opened due to compliance compulsion. Now I don't know what is this compliance compulsion. No billing is done from the branch. No input is received in branch. No employees are there in the branch. So do we need the ISD registration there?
I would say one, if you have no turnover at all in the other state,
Yeah.
again, we're not talking about whether what you're doing is right or not. We'll go with the fact saying that there is no turnover in state of Tamil Nadu. There is only turnover in the state of Karnataka. That means there is nothing called as common now because everything is to the benefit of Bangalore. I mean, in your example, what we're speaking about to the HO. So since the beneficiary is only one particular state, the invoice from the vendor can come directly to that particular state rather than going through ISD. So I don't see a need of ISD in your particular example, especially since you're saying there is no turnover in the other state.
Correct. Now, Mr. Sanjay has a very interesting question, and it relates to that amendment which has been made in the rules, which has still not been notified, which talks about considering the turnover of non-registered branches also and including exempt turnover also. So on that, let's discuss, Sandesh. He says, his question is, we have entire business in Karnataka, in Maharashtra, except solar power plant outside the state. We sell this generated power at nil rate. Looking at this, do we still need to get ISD registration done, or can we continue to reverse common credit? So the point here is that they have solar power outside, for which I don't think they have taken any registration because they don't have a place of business. Only the solar power plant is located, or like a windmill is located outside the state, and they are selling the power also from that state only. So is ISD required, is his question. I think it's linked to whatever you answered just now.
Yeah, absolutely.
But maybe you can throw some light.
The question here again, I mean, I don't know how do I get answer from you, is are you disclosing that exempt turnover of the other state in the original state, which is your HO? If the answer is yes, then there is no requirement of ISD at all. If you're not disclosing the exempt turnover of the other state where the plant is in the original state, then that means we are treating the other state to have presence with nil turnover, thereby no registration. Then there could be requirement of ISD for common credit distribution, and to the extent of the credit that might pertain to the other state where you have not obtained registration, that credit would get lapsed rather not get claimed anywhere at all. So I hope I've answered. If you're disclosing in state A, considering state B has no presence at all in terms of place of business, then there is no requirement of ISD. If the disclosure of the exempt turnover of the state B is not happening in state A, then there could be requirement of ISD for the purpose of distributing credit to the other state, but that would not get distributed, but would get lapsed.
Okay. Mahesh, has a procedural aspect on ISD. Should ISD raise an invoice for distributing credit, and whether it is an e-invoice?
I don't think so. Is that I don't have an answer to this. I've not done this, but I don't think so. It goes through the muster of e-invoice. So it's a different kind of invoice as we spoke during the session. So this will not go through invoice route. This is not an invoice for supply. This is only invoice for distribution of credit. Thereby, e-invoicing provisions would not apply to ISD distribution invoice.
Correct. Under what circumstances would an office receive tax invoice, receive services, pay consideration, but such service would be received on behalf of another person? How do you define on behalf of distinct person?
So there is
the
no
point what
there is
Krishna
no
is asking.
definition.
Yeah, sorry, sir. Go ahead.
So there is no definition of on behalf of, but I would say if the other registration is also beneficiary to such services provided by a particular vendor, when it is invoicing to one registration of the PAN instead of billing it to multiple registrations of the PAN is when the requirement of distribution comes into picture. I think Hanish gave several examples while discussing. Statutory audit could be one, but again, you can argue the other way as well. Assuming statutory or not assuming, rather, statutory audit is a function or a service provided to the entity as a whole. The beneficiary of it could be multiple branches. So thereby, the credit per se should not rest in one particular state. It should flow back to each of the states to the extent of the turnover that they are contributing to the top line of the company. So that's what it is in terms of distribution. So that's one example. The second example where on behalf of thing could be thought of. Take an example where a CA service itself, probably say a stock audit is done, say in Maharashtra, and the HO is say in Bangalore, Karnataka, and the chartered accountant who did the stock audit in Maharashtra, even though there is a registration in Maharashtra, because of the way the work order is released from Bangalore, he might have billed on Bangalore registration. Now, the invoice which is received by Bangalore branch ideally is not for benefit of Bangalore. It is for the benefit of the state, a state of Maharashtra or the registration in Maharashtra. So this is one classic case where the invoices come to Bangalore to the ISD in our example, but for the beneficiary of Maharashtra, thereby the invoice will get fully distributed to the state of Maharashtra. So there could be n number of examples like this. So we only took two examples which could be relevant for our discussion.
Okay. Now, Pratap is asking that you avail the credit, you distributed the credit through ISD, but you have not made the payment to the vendor within 180 days. What happens to that credit?
God bless you. See, we exactly
Uh-huh.
discussed the same example just before the session. So what actually happens is, say, suppose HO has distributed 10% of the credits to the state of Tamil Nadu, and Tamil Nadu has claimed the credit of that 10% of the credit on a particular invoice. Now, Tamil Nadu is undergoing audit under Section 65 by the department. And the department, as part of the audit procedure, also asks you a question saying, prove me that all the payments are made within 180 days from the date of the vendor's invoice. Now, the question is, generally, what do we do? In the ITC register, we put the payment dates and demonstrate that the payments are made within 180 days or not. And in few instances, the audit officer might insist saying that show me the payment in the bank statement, and we go back to the bank statement and show such payments. Now, in our case, when it comes to an ISD credit which I've claimed, that per se will not find an entry in the bank statement because the distribution to Tamil Nadu has only happened 10% of the total invoice, whereas the payment in the bank has happened to the extent of the 100% of the invoice. So you will actually have challenge to demonstrate when we talk about a branch which has got credit from a ISD to demonstrate that the invoice to the extent of the credit that is claimed is in fact paid to the vendor or not. This is, I think, a perennial issue. I don't have an answer to it, to be really frank, but the payment obviously would have to be made from the company as a whole. So if a made payment and it is reflected in the bank statement and you're able to demonstrate that total payment to the distribution totally to all the registrations put together, I would feel that's the ideal situation. But how do we demonstrate that to each of the invoice that has come from ISD is, I think, a bigger challenge to address. So how do we demonstrate the payment? If the payment is made at the HO level also, that is sufficient payment proof for payment from 180-day perspective. But how do you demonstrate to the extent of the credit distributed to the branch is a bigger question to ask.
Right. There are a lot of questions actually, Sandesh, but most of it we have covered. Like again, nil branch turnover and a few other points. So I'm not covering all of those questions at all. What we will do, and we are running short of time as well. So what we'll do is, you have our email addresses. We will be sending the PPT as well. So if for some reason you believe that we have not been able to answer few of your questions, then please write to us and we will definitely respond to those. Some of you have asked whether we'll get the PPT. There's nothing much in PPT, but recording, definitely we will share it with you. We will be hosting it on our YouTube page as well, so that it benefits all of us. And if you believe that few of your questions have not been answered, you are in direct touch with us, please write to us. Or if you are not, then send us an email and we will be more than happy to respond to your queries. Right. With this, I would like to first of all thank Sandesh for asking me questions in a very interesting way so that things go very smooth. Thanks to Mansa for all the support she has provided for organizing this webinar. And thanks to you guys that we had almost 500 plus registrations, and at a point we had more than 400 participants attending the seminar. Thank you very much for that. And because of these large numbers only, like even the Safari retreat judgment, we had almost 350, 400 people attending. So that what gives us a push that we have to bring in more and more interesting content. So thank you very much for that.
Thank you. Thank you so much.
Thank you, everyone.
See you
Thanks a
soon,
lot.
guys. See you soon again.
Thank you. Thank you.